What's up guys, welcome to the Momentum Trading Lab, and in today's video I'm going to teach you about the unicorn entry model, which is a trading strategy that uses two PD arrays, the breaker block and the fair value gap. Stay tuned because at the end I will share with you my personal entry model for those high probability setups. Without any further ado, let's get into it. Okay, let's do the breakdown of this trading strategy. So the unicorn model is whenever you have a breaker block and a fair value gap overlapping. So a breaker block is when we have price action, trading into liquidity, taking out an old low, and then shifting into a bullish market structure by taking out the previous high. So the breaker block will be the highest up close candle before price action ran into the liquidity and then shifted into a bullish market structure. And if we have a fair value gap in this displacement leg, this is known as the unicorn trading model. So we then wait for price action to trade into the first PD array. So it doesn't matter if the fair value gap is at the top or the bottom. We will enter in the first PD array, enter our position right here with our stop loss at the low, and we will target a 2-to-1 risk to reward ratio. Okay, this is an example of a bearish unicorn trading model. So price action trades into the buy side liquidity, taking out the previous high, then flips into a bearish market structure. The breaker block will be the lowest down close candle before price ran the liquidity and shifted market structure. And in the displacement leg, if there's a fair value gap overlapping the breaker block, then we have a valid unicorn model. Okay, let's have a look at an example of the unicorn trading model. So right here, we have the potential of a bullish breaker forming because we have the low, the lower low. So this is price action taking out the sell side below this low. So if price action can break above this high, then we have a valid bullish breaker. So sell side below this low. And if we displace above this high, then we have a bullish market structure shift. All right, so right there, we shifted above the high. So now we have a valid bullish breaker block. So the bullish breaker is the highest up close candle before the move down that took out the sell side liquidity. So it will be this candle. So we can extend this. So this is our bullish breaker. And now for the unicorn trading model, we need a fair value gap to overlap with this bullish breaker. And we have one right there. Okay, so now we have a valid unicorn trading model. So now if price action can retrace into the first PD array, in this example, both of them are exactly aligned. So we can enter our position right there. Stop loss right at this low. And then we will target a 2-to-1 risk to reward ratio. There's also some relative equal highs right there. So we can pair our long position with the buy side above these highs. Okay, let's see how this plays out. All right, so right there, we are trapped into the long position. So let's say if it goes to our TP. Coming back close to the entry. Right there, it's our TP. And I believe this went on a little bit more. So that would have been 86 points on the NASDAQ, which is pretty good. Okay, now we will have a look at a bearish example. So right here, this leg to the upside took out the buy side liquidity above this high. So now if price action breaks down below this low, that will give us a bearish market structure shift. And the lowest down close candle before the move to the upside that took out the buy side liquidity will be the bearish breaker block. And if we have a bearish fair value gap overlapping that bearish breaker block, then we have a valid bearish unicorn trading model. Let's see how this plays out. Okay, so right there, we have a move to the downside. So we have a valid bearish breaker block right there. Okay, and let's see if we have a fair value gap that overlaps this bearish breaker block. We have one right there. Okay, so now if price action retraces back into this fair value gap, then we can enter a short position and target a 2-to-1 risk to reward ratio with our stop at the very last high, 2-to-1 risk to reward ratio. Okay, and there's a low right there for the sell side liquidity, so we can align it with that low right there. Okay, let's see how this plays out. Okay, so right there, trapped into your short position. And right there, jump straight to your TP into the sell side liquidity. Okay, now for my personal entry checklist that I use for this trading model. So first of all, price action must trade into a higher time frame point of interest. So what that means is price must trade into a higher time frame PD array, for instance, a breaker block, a order block, or a fair value gap, or it must do a liquidity rate. So I look for that on the 4-hour, the 1-hour, and the daily chart. And once that has happened, I then move to the 5-minute chart and I scan through the 5-minute and the 2-minute chart for the breaker block to form. Once the breaker block has formed, I look for an overlapping fair value gap. And once those items are checked off, I will then enter my position with my stop loss at the low, and I will target a 2-to-1 risk to reward and targeting the opposing liquidity pool. That has been the unicorn trading model. I hope you guys enjoyed this video. If you did, please remember to hit that like and subscribe, and I'll see you guys in the next one.